All right, guys, it's time for our guest time. You guys smash the like.
Mish Snyder, Managing Director of marketgauge, and a person with a lot, probably as much experience in the markets as me, and as well as Dennis here. And did you hear us arguing? Would you tell us to go to our room? Dennis, go to your room. You're interrupting Joel, and Joel, you're being obnoxious.
I know, I do that.
Well, I heard you
you
say,
need to
you
do
said 2.5 years ago,
Get him, get him, Mish, get him.
Yeah, and I'm like, I can't remember what I said 2.5 years ago. I had to think about it. I mean, I guess it was post-COVID, so everybody was bullish then.
Yep,
Yeah.
that is true, right?
Yeah.
How times have changed.
Yeah, and then I started thinking, what did I tell you guys a month ago when I was here? I don't remember. But yeah, it's certainly, and listening to where we're at right now and what's going to happen, I did totally agree with the point that we have seen such carnage in so many areas of the market outside of the pockets that have done well, that perhaps recession is priced in already. I think that could be an interesting theory. And I also have never really felt recession anyway. I've been more in the stagflation camp. And
well, that sounds worse.
It's worse for the Fed, yes. And it's not great for traders and investors because, as we know, we can range. And that's what it looks to me like we could be heading towards. So far, we've held, people were all about the 420 level. And I smile at myself when I say that, in SPY. But 417 was really even more important in a monthly chart, because that was when we had the big breakout over the 23-month moving average, which is how I came into this year, watching that 23-month, 2-year business cycle. So we've retraced. And hence, that's where the stagnation could lie. I mean, could we break it and go to 400? Yeah. But I don't think we're going to crash. But I don't think we're going to soar either. I think we're going to find a comfortable area until certain things in the world calm down, until we really understand what the long bonds in particular are going to do, because they could actually signal a recession. Potentially, they haven't yet. And that's kind of what fourth quarter could look like. Pockets will do better, and maybe we'll get some short covering and good bounces on the ones that have been destroyed. And I have a couple of those in my head.
I do too.
Yeah.
Why don't you give us a couple of those?
Well, you know, I when I say this, I scare myself when I say this, but but I actually have a position in it, so I'm not that scared. I had this sense, this feeling, and I have to say, this is just a feeling. This is not based on really, well, a little fact, and that is 3D Systems, which went down to like $3.80, and I'm thinking to myself, this is a company, this was the original IP of 3D technology.
Yeah,
They're the ones who put together, you know, being able to print an ear, for example, in biotech, or all of the dentistry that you see where they now 3D print crowns. They're the ones who made deals with companies, aerospace companies, for parts in planes 3D printed that were lighter. And they're the ones, or one of the companies, that have been experimenting with 3D building of homes. And I'm like, that's got to be worth something. So clearly it's one of the most poorly managed companies in the world. That's why this stock has just collapsed. But the IP is worth something. And about 2 months ago, I guess, there was this chatter between Stratasys and Desktop Metals about a takeover. And they were looking at $24 a share, and then they rejected it, which is amazing. And I think that's one of the reasons why this thing has just collapsed. But I just keep thinking some company somewhere has to say, I want that IP. It's got to be patented. I want that IP. And at $4 a share, how much lower can this stock go? And can it get back up to 10, 15? I'm not even talking explosive. But that would be, you know, a double, triple in the current stock price. I'll take that all day long. For $1 risk, that's kind of where I'm at right now.
Not a bad play there. Just to mention two others that are in this camp and also cheap, DM and VLD, Velo 3D, that does SpaceX 3D printing. So this is interesting space. Mish and I think that
Do you guys remember? I don't. There was a stock. I think it's still Organova. Remember this one? ONVL.
Yeah.
Dennis,
Oh, yeah,
remember
yeah.
they created an apple that you could eat?
No, he couldn't eat it.
Yeah, you could. I think you could. I think I bought this stock.
But they were, that was a joke, but Organova was the organs. They were creating the organs out of 3D
that's
printing,
right.
like organs for you. It was an awesome concept. And I mean, the story drove that in 2016 to $100 a share. Obviously it didn't materialize and it's back at $1, but to Misha's point, is there some diamonds in the rough here? I mean, I think if you're a stock picker and you really know the business is here, not all of these companies are going bankrupt.
No, and 3D technology, it was kind of like AI is now. It was all the rage when it came out. And then obviously it never really was able to be transferred into the retail space. And so that's the thing. And I think a lot of these companies now that are doing well because they're in a more of a defense area, and we happen to be in two wars. Well, one war really. The other, we're not quite sure what's happening yet. So I think it'll come around. That's what I'm saying. And then and like I said, from a trader's perspective, maybe I'd risk $1. I think I have my stop under 350 or something. I'm like, that's it. Obviously, the company is going bankrupt potentially. And if I can get up to 10, I'd be like, thank you very much.
Big wall at 450. That's what I was looking at in 3D Systems. So the reason I want to have you on is, there was some of the big guns out there with, Bill Ackman, Bill Gross, talking about, the bond markets and their position.
Oh,
Joel just got the rug pull. I don't know if he hit the back button or not, but there he is. There he is. He pulled his own rug. What's up, Joel? What happened there?
Welcome back.
I was tapping my finger there, and I'm like,
well, you can't hit the back button, Joel.
Two things. Talk to us about the bond market. Do we have a turn?
Mm-hmm.
I guess we could throw that into the Fed, and then let's go to the IWM.
Okay. So I can't necessarily say with any assurity that this is a permanent turnaround in the bond market. I was looking for 81.50 and we got to like 82.40 yesterday. So it's close to where my target was. And my target was based, by the way, on technicals of a monthly Bollinger Band, which, by the way, we also had the same one in DDD, by the way. It kind of touched on it or came right to it. From a real motion or momentum indication, it came into this week with a mean reversion. So it was due for a bounce. And then, from another, if you look at some of the other charts, I mean, obviously we could be seeing some kind of a V-bottom type in the daily chart. But we have so far to go. We have to get through the 10-day moving average, and then we have to get through the 50-day moving average, which is an up until 90 area right now. So here's how I look at it. To me, if the bond market rallies and the S&P 500 rally in concert, that's great because everybody's going to be getting super bullish if that happens. However, if the bond market rallies and the S&P 500 doesn't participate and we start to see the bonds outperform the S&Ps, that's a warning. That is a classic risk-off environment. Yesterday, if you look at the leadership indicators of SPY and TLT, they are kissing at the same point. They are both performing the same. So what's going to be really important over the next few days is to see what happens. Up in tandem, okay. SPY flattens lines and bonds continue up. The market is signaling that maybe the timing wasn't exactly the perfect timing, but maybe recession isn't exactly off the table. Or at least, like I say, stagflation gets more dicey because we start to see this sort of recessionary numbers hitting other areas like the labor market, which has been so strong. And that's kind of where I'm at right now.
So just quick technical question here, and I'll let the guys take it away here. Like when you hear people talk about moving averages, and actually I saw a young lady on CNBC talk about, well, the 200-day moving average, we traded. What do you like? Do you use closes of it? Do you closes above it or below it? I mean, you can always say what it is. We all know it's a lagging indicator. I mean, Dennis and I don't use them. I use closes. To me, like, if there's a good closing level, man, you got to close above or below it 2-3 times. What criteria do you use for your moving averages?
Well, you're giving me such a great opportunity to talk about my book for a second. So my book, Plant Your Money Tree, is all about moving averages. And I use a weekly time frame in the book because I assume not everybody is as active as we all are in trading. But it works the same way. So there are 6 phases. And that's how I look at it. If we get through, let's say, a 200-day moving average, and let's talk about the SPY, right? It got right up to the 200, but didn't close above. So I'm with you on the close. Or it's the afternoon and it's so obviously clearing. But I look for a 2-day confirmation before I say, yay, we've had a phase change. And if we go from what we had as a distribution phase, which we're coming into confirmed in the SPY because we couldn't get that close, today we clear the 200 and we stick. That would put us back into a caution phase because we're still underneath the 50, right? So the 50 is above the 200, but the price, if it goes above the 200, would be back to a caution phase. I would want to see that happen today and then again tomorrow. And so I'm kind of in that 2-day confirmation camp before I get too excited.
All right, I think Mitch threw your
go ahead,
book
Mitch.
up
No,
there.
go.
Go ahead.
Yeah, I just
Triple
threw up
D,
the
you
book
guys.
right
I've been
now.
talking a lot.
I'm gonna have
Go
to
ahead.
take a look at this for my book club. Mish, I'm gonna reach out to you. We'll take a look at it. Maybe add it to my book club.
Send me your address. I'll send you a copy signed.
You see, it's always great to talk books, man.
Signed
I
copies. I love having
Teach
signed
Mitch.
copies.
Hey,
There you go.
It's
Buy
always
some extra
great.
olive oil with the money you're saving.
All right, Mish. Now, one thing that I will be covering a little later today is commercial real estate. And I wanted to get your perspective on commercial real estate. So
Well,
what do you think about that situation?
Okay, well, it's interesting because you mentioned small caps, so that's my granddaddy of the U.S. economy, right? And commercial real estate is very tied into that because a big part of the small caps is actually financial. So there's, some regional bank in there, and there's also some real estate in there. And so what do I think about commercial real estate? This actually, now I'm having a flashback. I do remember we talked about before. I think it has to evolve as the times have changed. I mean, clearly the work from home, we're looking at talking to somebody who might start working for us on the asset management side. And he's like, well, one of my criteria is I can work remotely. And I don't think that's an unusual statement from people. And of course, that's affected commercial real estate. But I think it'll just change. It'll adapt. But it could hurt first. In terms of IWM, though, I think that's why I like to keep it simple and not overthink all the different pockets. If we keep it simple and just look at IWM right here, now that not only crashed below the 23-month while SPY has retraced to it. So there's that great divide between the small caps, the S&P, and of course the growth stocks in NASDAQ. Those alligator jaws that you see sometimes people draw wide, wide, wide. But it also broke down under the 80-month moving average. And this is super important because it's a month moving average. So back to your point, Joel, where would I count that as an actual failure? October 31st. If we close below 170 by the end of the month, then it is actually a monthly breakdown. Now, we can go back through it in November, but who wants to wait 2 months for a confirmation? But if it breaks below, I would probably be more cautious if we can't get back through 170. And if it comes back,
beautiful.
And if it gets through 170, I'd be like, buy everything. That's an
There we go.
Yeah, and XRT, his wife, Granny, I love to talk in that language, has not broken the 80 months. So right now, between the TLTs, like I said, which could really, this is all you need really to be a macro expert. I mean, I go on all the time and people want the macro, but really what I'm doing is interpreting what these things are telling us technically. So retail is telling us that the consumer is hurt, but not like so much pain because it's still above an 80-month moving average. The small caps have been impacted by commercial real estate, by regional banks, and some of the other companies that could not handle these high interest rates. And transportation, the other inside sector, is also doing even better than both of those. So this is where the stagnation comes in. But if the TLTs start to outperform the SPY, risk off. If IWM can't get through 170 and Granny starts breaking down under 57, XRT, definitely risk off. And the reverse is true. If we get run through 170, if TLTs don't start screaming above the SPY, and retail can actually hold up here and maybe get back above that 60 level because it's kind of tried it last week, I'll get a lot more bullish. And I think up until that point right now, that's why I've been so focused on commodities and a couple of other areas that I really like. You know, like I've been touting Coinbase for over a month. Be patient because there will be talk of spot ETF and that will benefit if you're not like
Great
into
call.
buying Bitcoin. And I think we even talked about Bitcoin. I mean, over 28, I started getting bullish and we actually took a profit in our quant model in it yesterday at 33. So, you know, there you go. You gotta look at what's decoupling, but at the same time, keep your eye on those areas of the actual.
Mish, before we let you go,
we're gonna let me go.
No, I'm not gonna let you go because I got one more thing. Because
Okay.
I always tell floor stories. Okay.
Oh, floor stories. Okay.
And I don't know if I've told some over the years, and I go off on a tangent, maybe just working home, not being around other people instead of being cramped with 500 people. Do you have one for us? I don't know if you told us one over the years. Do you have one that's like shaped your market sentiment? Or I know being a woman on the floor, I'm not, I know how.
I told you this, Joel. That wasn't even all that interesting because they didn't care that I was a woman, really. You know, it was more about, was I a trader? You know, and I think that's how you get accepted into the club down there back in those days, is if you take your knocks like everybody else and you have a good sense of humor and you play nice with others and you know how to trade and you've got something to offer to the group, you're accepted.
Did you ever get knocked down?
No, I never got. So I'll tell you. Okay, so you want to hear like a little gross story. So, you know, one of the things I always like to talk about is how we measure momentum now with an indicator, but down there you could see it, you could feel it, you could hear it, and sometimes you could taste it and smell it, right? So one of the worst times in the market for me as a small person, and I would step. So there were 4 steps down, and then so back in the day, right, there were 4 steps, and then in the middle of the ring were the people who caught all the cards. So as you were trading, as a trader, you would write your order that you just did and filled, and you'd throw it, fling it into the middle, and those guys would gather it up, and that's how they got the prints. They did it so fast. I mean, it was amazing. So there were 3 steps down. I stood on the 3rd step down, which means I had 2 tiers of guys above me and 1 tier of guys below me. And I say guys, there was maybe 1, max 2 other women in the pit. And this was crude oil. So maybe there were like 200 people in the pit altogether. It was a big ring. And then after lunch, sometimes the ring would get cleared out no matter how busy it was, because as you can imagine, what people ate in the moment when momentum would start to pick up, all senses got engaged. And that's the most delicate way I could put it. But sometimes here I am all these years later, and at around that noon, 1 o'clock time, you know, sometimes the market will do exactly opposite of what the rest of the day was.
Did you ever get fined? Did you ever get fined?
Me personally? No, I got dragged into.
That's only you, Joel.
Yeah, no, I got dragged into a controversy because I was keeping charts in the coffee ring. And this guy, he's passed now, so I don't want to speak ill of him, but he had a real problem with a woman in the ring, and then so he used the charts. He was like one of the few people, and he brought me up on charges that you're not supposed to bring charts in the ring. And I won.
Man.
Yeah. Oh yeah. I had a whole hearing, and it was crazy, but I won. So. All
right, we gotta let you go now, Mish Snyder. Market minute, you got to catch her. We got you a long time. I appreciate it. We'll talk to you soon, Mish.
Oh, thank you, guys. Have a great day.